What's up, subscribers? Welcome back to the channel. In this video, we'll be talking about one of my favorite dividend-paying stocks, a real estate investment trust known for their monthly dividends, Realty Income, trading under the ticker O. But first, if you haven't already, be sure to subscribe so that you get notifications about our future videos talking about the stock market and personal finances. And while you're down there, if you haven't already, be sure to check out the links in the description to get your free shares of stock from Webull whenever you open and fund your account, as well as $10 of free Bitcoin from Coinbase whenever you open your account and make your first $100 purchase of cryptocurrency. And don't forget to smash that like button for the YouTube algorithm and to help support my channel. So grab a cup of coffee or your favorite beverage of choice, and let's jump into it. Realty Income is a stock that I talked about here on my channel a few months ago, saying that it was the #1 stock that I was buying. And although over the last few months here in the stock market that has changed since Realty Income share price has overall been uptrending, I continue to love Realty Income as a long-term investment. But after its recent run-up over the past few months, currently at the time of recording this video, we're seeing Realty Income share price start to pull back. With this downward movement coming off of Realty Income reporting earnings earlier this week, fear in the market about potential rising interest rates and inflation, as well as Realty Income announcing an upcoming merger. So with all of that being said, what did Realty Income report to shareholders on May 3rd whenever they announced their first quarter earnings report? Overall, Realty Income was able to report a solid earnings, reporting a net income of 26 cents per share with an adjusted FFO of 86 cents per share, more than enough to cover their monthly dividend. In addition to that, they were able to invest $1 billion into properties in order to further expand their portfolio, and they were also able to pay off the principal of their outstanding notes that were due in October of 2022, and raised additional funds in the form of a stock offering to further fund their growth in the future. Overall, in the first quarter of 2021, Realty Income was able to see growth in their total revenue, growing to $442 million in the first quarter compared to $415 million in the first quarter of 2020. But despite that growth in revenue, Realty Income did see a decrease in their net income as well as their FFO. And despite ongoing struggles because of the pandemic, Realty Income was able to collect on 94% of their rents. And of their approximately 6,700 properties, a large majority of them are currently leased, with only 131 properties available at the end of March. So overall, after reviewing their quarterly report, I believe that Realty Income continues to be a solid company for long-term investors, and they continue to live up to their name as the monthly dividend company, announcing their 94th consecutive quarterly dividend increase in March. Although it was an extremely modest increase of 1.6% year over year. So now that we've had a chance to review Realty Income's quarterly report, what's going on with this merger that they recently announced? On April 29th, Realty Income announced that they will be merging with Vereit in an all-stock transaction. For those of you who aren't familiar with Vereit, like Realty Income, Vereit is a real estate investment trust specializing in commercial properties. Shares of Vereit trade on the New York Stock Exchange under the ticker VER and are currently trading for around $46 per share. Through this merger, Realty Income will acquire Vereit in an all-stock transaction, creating a combined company with a value of approximately $50 billion. Through this merger, current Vereit shareholders will receive 0.7 of a share of Realty Income stock for every share of Vereit stock that they own. In addition to that, pro forma ownership of the new company will be approximately 70% for Realty Income shareholders and 30% for Vereit shareholders. And the combined company will also be spinning off another business consisting of office assets, which will also be a publicly traded REIT, with this spin-off company currently being referred to as quote-unquote SpinCo. Pending approval from shareholders in preparation for the spin-off, this merger is expected to close Q4 of 2021. This merger is expected to benefit both companies immediately by generating a significant increase in the adjusted FFO. And as a current Realty Income shareholder, I believe that this is a great move for Realty Income. As we can see on this slide, through this merger, it will allow Realty Income to further diversify its portfolio of properties and clients. For example, we can see that after the merger, Realty Income will be less dependent on clients for their portfolio, with Walgreens, for example, decreasing from 6% to 5% of their rent, and AMC, which was number 10 in the list of top 10 tenants before the merger, will now be replaced by BJ's. So this merger will be a great way for Realty Income to further diversify and not put all of its eggs in one basket. As previously briefly mentioned, the total enterprise value of the new pro forma Realty Income company is expected to be worth approximately $50 billion, with the total number of properties increasing to 10,300. And once again, the new pro forma Realty Income will be a much more diversified company, with their top 10 client concentration decreasing from 36% prior to the merger to 31% in the new company. And like we mentioned, in the merger, the pro forma Realty Income plans to spin off its office assets into a new publicly traded company, quote-unquote SpinCo. And overall, I gotta say, I love this idea. If the pandemic has taught us anything, it's that overall, for the most part, traditional office space is no longer needed, as we have seen so many companies transition to the work-from-home model. So overall, I like this plan from Realty Income Management to clean up their portfolio, to get ahead on this work-from-home paradigm shift, and spin off assets that were part of the core business. And sticking with the trend for the pro forma merger, as Realty Income shareholders, we will receive ownership of approximately 70% of this SpinCo company, with a portfolio primarily made up of healthcare and insurance companies such as Cigna and Merrill Lynch. So after reviewing plans for this merger and also reviewing Realty Income's recent quarterly report, what have I overall been doing with my Realty Income position? Like I've mentioned briefly a couple times already in this video, I continue to love Realty Income as a long-term investment. And while I can't say that I'm actively adding to my position as heavily as I was a few months ago when Realty Income was trading in the high 50s to low $60 range, at the time that I'm recording this video, we have seen some weakness in Realty Income share price, currently trading for around $67 per share. And at one point before the market closed, it did briefly dip down to around $66.80 before recovering back up to over $67. So here in the short term, I'll be continuing to watch Realty Income share price closely, and if it falls down further, then I'll definitely be picking up additional shares here and there to add to my long-term position. But just remember, my videos are never medical or financial advice. They're merely me researching a company and talking about my opinions about that company based on that research. An investment in Realty Income, like an investment in any company, comes with risks. So if you're thinking about investing in Realty Income, please make sure you're doing your own research and only investing in Realty Income if you're willing to accept those risks. What are your thoughts about Realty Income? Are you invested in Realty Income? Are you thinking about investing in O? Where do you think the share price is going over both the short term and the long term? And what are your thoughts about the upcoming merger? Be sure to comment down below and let me know what you think. And while you're down there, if there are any other stocks or topics that you would like me to talk about in a future video, please feel free to comment that down below as well. As a reminder, this video is for entertainment purposes only. I am not a certified financial planner. I'm a resident physician with an interest in personal finances and investing. Please make sure you're doing your own research before you make any financial decisions. And please be sure to smash that like button and click on the subscribe button for the YouTube algorithm and to help support my channel. Thanks everyone. Have a great day.